Hello and welcome to From No Crypto to No Crypto. This is Blockchain Wayne bringing you another cryptocurrency podcast. Today's episode is brought to us by Concierge Club, mobile private key wallet and point of sale solution, helping to make cryptocurrency purchasing safe, efficient, overall costing less, helping to make cryptocurrency mainstream. All right, let's take a look at the market update today. What do you think we're going to see? That is right. It is another boring day in the crypto market. Low trading volumes. Bitcoin is basically flat. I mean, it's slightly down from yesterday. Total market cap of cryptocurrency is sitting at $217 billion, down just $1 billion. Sounds like a lot to you and I, but with all the cryptocurrencies out there, that's not a very big shift. Less than 1%, about 0.5%. And like I said, Bitcoin dominance is sitting still at 52%, and trading volumes are extremely low. Now, you'll see some news articles out there talking about trading volumes are extremely low, and that's a bad thing, right? So, yeah, in the long term, for price action, not a lot's going to happen when there's low trading volume. But I look at it as this could be an indication of a reversal of trends. If typically when trading volumes are high, you're seeing a trend going one way or the other. We've been moving sideways for well over a week now. And what that means is that, basically a lot of the selling pressure has been exhausted. It's definitely been exhausted. Nobody's selling below 6,000. Now they're putting in that bottom. So, okay, 6,500. And if you see what happens, this could indicate a trend reversal as we ladder back up. And then once we hit a key point where it's confirmed that, yes, this truly is a trend reversal, you'll see those volumes return. We saw a little bit of it early this morning. I was looking at the charts really early this morning. I guess it was about 2 or 3 in the morning, and saw some serious volume coming back. But we will see once the true trend reversal is put in, and most people have a general consensus that that's the case, then we will see that those volumes return, and we'll see an up movement taking place. That's just my opinion, my personal opinion on what we're going to see happen next. All right. So let's look at what's going on in the news. I'm going to cover first couple of news articles I'm going to talk about the direction of Bitcoin and cryptocurrency and where we're heading. So the first article we're going to look at says Bitcoin price is heading into a classic breakout pattern. And this is from eToro senior market analyst Maddie Greenspan, who says that the market may soon return to its volatile roots as Bitcoin looks poised to awake from its slumber. Right, so that snoring you heard me. Hopefully I won't be using that sound effect too many more days. Used it a few days in a row. Writing in the market commentary made available to CCN, which is where I shared this article from, Greenspan said that Bitcoin's range has steadily been getting narrower, so much so that it has now reached a tip. This, he said, is a classic breakout pattern. So what do you think is going to happen? Let's see. All right, another signal that the bear market may have ended is Ethereum's. Ether September price low could signal end of Bitcoin bear market. This is from another analyst. Ethereum's price in September was significant to ending the 2018 cryptocurrency bear market, according to a new theory from one cryptocurrency analyst. So this is from a series of tweets from UTR Equities crypto market commentator Eric Thies. He stated that Bitcoin's run to all-time price highs in December came as a result of Ether investments during the ICO phenomenon. When interest slowed, so too did prices begin to free fall, Bitcoin reaching lows below 5,900 in February this year, and Ethereum has hit below 170 in September. And we see that potentially as could have been the bottom. And so this analyst is saying that was a signal of the end of the bear market. Let's hope he's right for you and I. All right, this next article, I couldn't help but share it. Whole lot of humor, whole lot of off-color jokes I could probably make, but I won't. SpankChain, who is a cryptocurrency project focused on the adult industry and specifically porn, has suffered a breach that saw almost $40,000 in Ethereum stolen. Now, we've heard of hacks in cryptocurrency that have been significant. And yes, to you and I, $40,000 is a lot, but to a company, that's really not that much. SpankChain team disclosed the hack, saying a 165.38 Ethereum has been lost. And that was as of Saturday. So they announced this yesterday, said it happened Saturday. The intrusion was made possible by a bug in the network's payment channel smart contract. It also caused $4,000 in SpankChain's Booty token to be frozen. Yes, you heard that right. Booty token. I can't make this up. This is hilarious. So it apparently took over 24 hours for the project to realize the hack had taken place. with the post stating, unfortunately, we're in the middle of investigating other smart contract bugs. We didn't realize the hack had taken place until 7 p.m. Sunday, at which point we took Spank.live offline to prevent any additional funds from being deposited into the payment channel smart contract. So I don't know about you, but if someone gets into my booty, I'm going to know about it right away. But apparently SpankChain took them a day to realize that somebody had taken their booty. So limits on the use of booty tokens have also been put in place temporarily. This could be a setback to the crypto industry. All right. I've had enough fun with that one. Let's move along. So Forbes has partnered with blockchain-based platform Civil to publish its content on a decentralized network. Civil's co-founder confirmed to Medium on Tuesday. So according to Civil co-founder Matt Coolidge, Forbes is integrating Civil software into its own content management system. From the beginning of 2019, journalists will be able to upload their data to the Civil network while posting it to the Forbes website simultaneously. So Forbes news outlet, been founded in 1917, reaches more than 120 million people globally through its main and local editions. So according to a report, initially it's only going to apply to cryptocurrency news. However, Forbes considers the experiment successful. They will begin posting other pieces of news as well. I expect to see much more than just crypto news being utilized on a blockchain. Now, whether it's Forbes using Civil's blockchain or another company using other blockchain, it would be a great idea to see some transparency in journalism, which we have not had in a very long time. All right, so next up, Singapore. Let's go on and see what's happening in Singapore. Singapore's central bank regulator, de facto, has backed domestic cryptocurrency startup and exchanges to gain banking services in the technology-forward city-state. So what happened is the Monetary Institute of Singapore's managing director, Ravi Menon, has called for banking industry to get over the hurdle of offering services to domestic crypto startups in a marked attempt to foster the fintech industry. Now, he said they're not taking an extremely lax regulatory environment for crypto. There will be some regulations that they will have to protect the companies and to protect the people, but they do need to offer banking services, which many cryptocurrencies have had a struggle with, being able to keep the companies running. So this is a very good example of very loose regulations. I mean, the regulations haven't happened, but they are very open to welcoming cryptocurrency companies, helping them get banks set up. That way they can create that business and have a good business relationship. So, all right, next up, Bitcoin has been featured in the children's Goosebumps book, further accelerating the cryptocurrencies present in mainstream media. So we've heard crypto rap early in the week, and now Bitcoin is in a children's book. The news was posted on a Reddit thread where the original poster shared a screenshot of a book. According to one of the answers thread, the book, called Haunted Halloween movie novel, it follows the conversation between two of the characters, where the first one pulls out a heavy wooden crate saying, "Dude, I bet this thing is stuffed with gold, diamonds, and Bitcoin." So very interesting there. So another bit of mainstream media hitting cryptocurrency. All right, so let's see what we've got. Next up is in CNBC, crypto analyst Rand Neuner, who's the host of the CNBC show Crypto Trader, has basically stated that crypto is about to break out. Now, what does that mean? He says prices are about to explode, citing bullish market buzz about the near-term possibility of an SEC-approved Bitcoin ETF. And he even tweeted, "I just bought Bitcoin from my parents. It's too obvious that it's about to explode." He tweeted on October 7th. Now, this is one of those cases where I hope he is right. But if you remember, if you've listened to some past episodes, CNBC typically has a history of getting it wrong. When they say something's going up, it goes down. When they say something's going down, it goes up. So I don't know what to think about this. Hopefully this is the rare occasion, because they haven't been wrong 100% of the time, just most of the time. So hopefully this is one of those cases where they are right. Neuner also went on to say the mounting expectation that the Securities and Exchange Commission could soon approve a Bitcoin ETF could send prices through the roof. All right. So next up, let's move on to our crypto education corner. And today I just want to talk about a couple things. So two problems I see most people have that's stopping them from creating wealth with cryptocurrency. And many people think they have to start with a big lump sum, so they never start. And some who do start with a small amount never think big and focus on growing their wealth, so they stop before they make a large amount, right? There's two different things. Either you think you have to come in with a big amount so you never get started, or you come in with a small amount and after maybe say a month, couple months, you don't see a lot of progress, don't see anything happening, so you give up. And that could be true in any aspect of life, right? Let's face it. Most people fail to dream big, and they fail to realize you can start small and then make it big, right? So both of those things are what's happening in cryptocurrency right now. Think about this. The next time that Bitcoin passes 10,000 and finds support, that's going to be the last time we see Bitcoin below 10,000, right? It's going to go up from there. It's going to surpass the all-time high eventually, and then we're going to see it really take off. So by mid-2019, you could also see cryptos incorporated into corporate offered 401ks and be a common investment opportunity for millennials. I mean, we're rapidly moving along with adoption. I'm not saying mass adoption where you can be able to pay for it everywhere, but at least where it will be an investment option for people in investment accounts. It's going to get some more acceptance. You see all these big names are hopping into cryptocurrency. They're looking to make those offerings available to not only institutional money, but also to your everyday investor while trying to protect them. So that is what's being shaken out right now. So buying cryptocurrency doesn't have to be in large chunks. This is the topic I wanted to talk about today. So if you plan to be a long-term holder and not a trader, laddering your buys in is the best strategy, right? So that gives you a dollar cost average. You hear people talk about dollar cost average. What that means is, say maybe you can spare $50 a week. So every week you buy $50, $50, $50, $50. No matter what the price is, you're buying at $50. If you're a long-term holder, your dollar cost average is great. If it dips, you're buying the dip. If it spikes, you're buying on the way up. Either way, you're increasing your holdings, and that is a big thing. And like I said, most people may start that and stop very soon because they don't see it making a big impact. You underestimate the power of compounding that purchase, and as you do that, it goes up and up. And so many just decide how much weekly, bi-weekly, or monthly you want to spend on crypto and buy. That gives you a great dollar cost average no matter what the market is doing. So that is my tip for you today. Not a lot around crypto education. Tomorrow I'm going to dig into some commonly asked questions when it comes to cryptocurrency. But today I just wanted to give you that tidbit of information. Don't fail to get in the game. I mean, you can start with a few dollars. And if you are consistent, you will find those buying opportunities. Now, I had a buying opportunity a little over a week ago, about a week and a half ago, where it was basically about $180 worth of Bitcoin, so to say. And that now granted, it wasn't just in Bitcoin. I found another altcoin that I wanted to invest in. It was a really attractive price. It looked like it had bottomed out. And my guess is by the end of this month, that could be a 5-digit return on that $180 purchase. So, but that's not saying that was just luck. It's consistency. You show up, you look at the market every day, you see what's going on, you try to up your skill, up your knowledge, which you're doing by listening to this podcast, and you will get better at investing. But most people, like I said, you'll listen to this, and many people who haven't started yet or started small and stopped because maybe, hey, the price dipped. That's not the right mentality. Typically when there is a dip in price, that's the best time to buy, right? You hear people say buy the dip all the time. They're not talking about the chip dip at the supermarket. They're talking about buying the dip, taking advantage of that. And say you bought Bitcoin at $10,000, or say you bought it at $12,000. Well, now it's much lower than that, right? So if you buy an equal amount right now, your dollar cost average has come down a lot. So now instead of having to get back to 10 or 12,000 for you to be profitable, you may only have to get back to 7,000 or 8,000 to be profitable because you've averaged your dollar cost buy-in. So that's all I want to talk about for today in Crypto Education Corner. I want to thank you for listening in. All the news articles we talk about in this episode can be found on our Facebook page, From No Crypto to No Crypto. Make sure you go give that page a like, click follow on it, and there's this option to select See First. That makes sure you never miss an episode, never miss a news update, and you can stay in the know as we share just the news that's important to show you what's happening in the crypto space to help move this technology and this market along. So that's it for today, everyone. Again, thank you for listening in, and we'll see you on the next episode.